All right, welcome to today's show where we go over all things real estate, business, money. Thank you for showing up today. This is Victor Bell from Bell Capital. I want to welcome you guys. My shirt looks crazy, right? Anyways, so again, if you're new to watching what I talk about here, this is Victor Bell, where I go in the zone and I talk about all things real estate, investing, money, business, everything. But today's show is about real estate investing. And that's what I do. Like, I'm the founder of Bell Capital. It's a real estate, it's a private real estate fund, private equity real estate fund, where we invest only in multifamily properties with the everyday investor like you guys. And I really, really want to thank you guys for showing up today. But the first thing I wanted to go over was about today's show. And it's like, how do you actually make sense of an investment in a deal? Am I talking loud? I shouldn't be. You can hear that because my mic is right there. But anyways, we're in the Zoom room, but I wanted to do the show in today's Zoom. So how do you make sense of your investment in a deal? And I can tell you the biggest thing for me, and we're always talking about multifamily real estate, not single family real estate, not office, not retail, none of that stuff. We're talking about multifamily real estate, residential multifamily real estate. So just want to clear that up for you guys as I'm talking. So when I'm looking at any deal for the fund, stuff that I've done in the past, I've always thought about this. Cash is trash. Cash is trash. It is useless until it is used. But a lot of people, most of us were always taught, get your money, save your money, don't spend it, save it for a rainy day, all that stuff. But when you're talking about investing money in a deal, you need to make sense of the investment in that deal. So when you think about cash is trash, even if you had money in a bank, the banks take your money and they lend it out 9 times. Actually, I heard it was 10. But banks take your money and lend it out 9 times. They get rid of your cash trash as fast as possible. They make loans on it. They lend it out. But they want you to dump your money there. Why? Because they want to use that, right? Because they already know cash is going down in value. They expect it. That's what inflation is. The cost of goods are going up. So that means your buying power on your cash is going down. It is worthless until it's put to use in something that's going up in value. So that said, I'm going to get my board. This side. Better side, right? All right. Blocks the light. So, as this thought process is like, how do you know then? Like, how do you make sense of investing money in a deal? So this is what I do all the time when we're looking at deals for Bell Capital. We're always looking at deals. Number one thing, why invest your money into real estate? Like, how do you do that? Because if you know that your value, the money that you have, your buying power is going down, you need to put it in a real asset, an actual real asset, not stocks, not bonds and stuff like that. You're not putting into something that like the stock market, Wall Street, the casino. You see what's going on right now with the election. Everybody's watching. Today was like Nvidia. They're like waiting for their reports to come out. Like last week it was Apple. Before that it was Microsoft. Like you don't even know what you're investing in, right? It's 7 stocks that's holding up the stock market, the Magnificent 7, the Mag 7. And as each one of these things drop, they pull your money down too. And be honest with you, 80% of Wall Street, 80% of all the stuff you see on CNBC is institutional money anyways. It's not the little guy, right? So you can't even buy a big enough position in those deals to make it make sense with your cash. So that's why I like multifamily real estate. So, but getting to it, and I'll try to slow down. I actually talk fast. I like this stuff. So, but why invest your money in real estate? This is the best way to make sense of a deal. This is what we do. So number one thing I'm looking for, you guys have heard me talk about this, it's got a cash flow. When I'm looking at a deal, is there cash flow? And when we're talking about cash flow, we're talking about it pays the expenses, it pays the debt, and it pays us as investors, right? So when you're thinking through, does the deal make sense? How do you make sense of a deal? Number one, it's got a cash flow. If there's no cash flow, if it don't cash flow, don't go. Like it's pretty simple. That's number one. But when you're thinking through any deal you look at, it's like if it's a single family house and it's vacant, does it cash flow? No, don't do it. Your own personal home, does it cash flow? No, you're paying for it. Not everything that cash flows is good. Somebody may say, well, look, you can buy stocks and you'll get a dividend, but that doesn't mean anything. The value can go down, which leads me to number two. Number two, don't lose money. Warren Buffett, the Oracle. As a matter of fact, I think if you look at today or sometime this week, Berkshire Hathaway finally hit market cap of $1 trillion. That's huge because it's not a tech company. It's not buried in tech and stock. It is basically him buying positions in basic economic businesses, and he's not losing money. So Warren Buffett, don't lose money. Steve Schwarzman from BlackRock, don't lose money. I mean, Blackstone, don't lose money. Larry Fink from BlackRock, don't lose money. This is a common conversation. So while cash is trash, when you're thinking about investing in a real estate deal, number one, it's got a cash flow. Why? It's got to make money. It's got to lead you through those lean years. If you're going to be in an investment, which you should long term, we're not talking about get rich quick. We're talking about create wealth for sure. So that's a long-term thought. It's got to pay you a little drip every month. Boom. Every month it's paying something up, paying our investors every month, paying the companies every month, paying you every month, paying back into your retirement every month. Next, it's not losing its principal balance. You're not going to take your money out of the bank that's also going down, putting into investment that goes down. You need to preserve the amount of money that you put in it. It cannot go away. And if it's in a real asset, you can see it, smell it, touch it. You can turn around and sell it if you buy something that's always going to be valuable. And then next, you need this. Let me see. I'm probably blocking it, right? The possibility of appreciation. That's appreciation. Appreciation. That's long. Ignore that. So the possibility of appreciation, it's got to somehow appreciate in value. And the way multifamily real estate appreciates is the rents go up. So that's how you know based on the location of the asset, the jobs in the city that you're invested in, and the location of the city. You don't want to be in a crappy area, in a crappy city where there's no jobs. And because there's no jobs, there's no income coming in, which there's no reasonable way to raise the rents. Because that is the only way. Well, that's not the only way, but that is the main way. A bank and or a lender or anybody on the planet, an appraiser, takes a look at multifamily properties. Rents are going up. As long as your rents are going up and you're in a great deal where you're not going to lose money, it cash flows, and you have the possibility of appreciation because rent increases that are going up around the asset. That is how I make sense of every deal. For example, let me show you a deal I'm looking at. So, can you guys see this? It's this right here, this whole section. Not right there where my finger is, but all of that. I wish I could get in closer. Can I get in closer? Boom. Look at that. That's beautiful, man. That is 400 units, 400 plus units. And we've been underwriting this deal. That property, for example, everything like that's 400. I'll just go over a couple things about that asset, really. Why that deal? When you think about how do I make sense of a deal? Number one, scale. There's scale in that deal. There's 400 units. There's 400 units in that deal. Even if this thing has a 10% vacancy, that's 40 units down. This is still going to cover expenses, it's still going to cover the debt, and it's still going to pay our investors. That scale by itself is massive. That's 400 units, and I think that's on 16 acres, if I'm not mistaken. Somewhere around 16 acres. I can look it up again, but like I said, just bear with me here. The scale there. So number one thing, scale, I'm looking at. Number two thing, that's number one. Number two, the amenities. That says amenities. The amenities. Everything around this property, there's $1.2 million homes there. There's $1.5 million homes there. There's multi-million-dollar shopping, entertainment in this area. There's a billion-dollar development going on in and around this area with hotels, golf courses, all this stuff. It is a Mac Daddy area. That area is constantly expanding. A lot of people are moving in this area, and everybody that lives in this area, the demographics of that area, everybody is in around $150,000 to $250,000 worth of income. That's their annualized income. So number one, that's there. Number three, it would cost anywhere from $600,000 to $700,000 per door to rebuild it. Right? So I already know this thing's probably going to trade anywhere from around 440 to 500,000 a door. I already know that. I have some inside information on that, which is why I love real estate. There's always information. So somebody would be able to get this thing below replacement cost. That's a below replacement cost for number 3. It would cost $600,000-700,000 a door to rebuild it. Somebody coming in is naturally, like I said, with us, it's kind of beyond our scope. We're in that 200 to 250 range, or 180 to 250 unit range. But I look at everything because that property is going to affect the other deals that we're looking at, because we looked at another deal around the area of there. So this will be below replacement cost. So that part, 400 units, 16 acres, the amenities, multi-million-dollar amenities in and or around it, $1.2 million homes, right? It's below replacement cost. It will cost $600,000 to $700,000 per unit to rebuild it. Not including, you would have to piece together the land. It would take you 2 to 3 years to just build it by itself. And you would get no cash flow whatsoever from that deal while you waited. If somebody buys this right away, you're buying it below replacement cost, so you're getting equity coming right out of the gate. And you're getting cash flow because it's already been operating. Let's see, what else? And I'm just going over how I make sense of a deal. And then I'm always like, okay, who owned it? What was that? 3, now 4. Who owned it? Who were the owners? This was owned by an institution. Well, at least institutional investors. I won't say who owned it, but the owners is a massive group. They're one of the largest owners. I think they have 80,000 units across the United States, and this is just one of their portfolio. They are the top players in the world. They're one of the top players in the world, and all of their investors are institutional, right? So this was owned by an institutional investor as well. So if you think about that, when you talk about assets that are not going anywhere, that are quality assets, you got institutional owner, 400 units, you got scale, you have below replacement cost, and you have this thing that the amenities around this asset are multi-million-dollar assets, entertainment, jobs, the demographics are people who can afford it. That is massive. So when I'm thinking through anything, how do you make sense of a deal? I'm like, okay, cool. It checks the box on number 1. We'll just go backwards on number 1. Don't lose money. Checks the box on number 2. There's cash flow already. Boom. Checks the box on number 3. We have future appreciation. Future A. Future A. Also money. Got it? So like when we're thinking about making sense of a deal, it checks those other markers for me on a deal. Hey, the scale of the property, the amenities of the property, it's below replacement cost. It has all the things that we need to believe, hey, rents are going to continue to go up. It's cash flowing right now, so we can sustain. And then in this asset, 400 units, let's look at that again. 400 units, you're not going to lose money in that deal. That deal is not going anywhere. It's not going to be destroyed. It's not going to happen. It's not going to be burned down. No earthquake's going to destroy this whole asset, nothing like that. And there'll be insurance on it. And it's easier to get insurance on a 400 unit asset because of the amount of scale and the revenue on that property than it would be a smaller duplex, fourplex, triplex, or even a 40 unit deal. The insurance is just cheaper. I got on the phone with an insurance provider that we were getting ready to work with anyways to underwrite some of our deals. And we were talking about that. And they're dealing with like Travelers Insurance and some other big insurance firms. And they're like, hey, they love the type of stuff that you guys are looking at right now. So it's going to be a lot easier for me to get insurance on these type of assets. Again, this all goes into like, how do I make sense of a deal? You got to know all this stuff, right? So when I'm thinking about investing money, my investors' money, all of those things, which are my investors are our partners, I have to make sense of it. And this is how we make sense of it. So if you're looking at a deal, you want to think through these things too. Number one thing, can this deal lose money? How? Maybe it doesn't have the scale. Maybe the location isn't good. Maybe there's no jobs. We don't think rents are going to continue to go up. They don't have to go up dramatically. They just need to keep going up. If we're going to be in a deal for a long time, we need to know that. Next, does it cash flow, man? Because if it cash flows, do it. If it don't cash flow, don't do it. If that was 400 units still being built and they had no cash flow, we'd be like, we'll pass. We'll wait until it's full and the developer comes to market at some point. The developer and his partners agree and they go, we're going to sell it. Then we'll look. And then we'll look at the rent rolls and we'll find out how much cash flow we're going to get, our returns, and the property needs the cash flow. And next, what's the future, man? do we think because the rents are going to continue to go up, how much money are we going to make? Are we going to double? Are we going to get a triple on our equity? How are we going to do this? And who's going to buy it? Oh, this is another thing, a reason why it makes sense. I left this off. This is a bonus. This is the exits. Also money. How are we going to get out, man? Can we refinance our initial, which is always the goal. I want to go back to the debt market, my lenders, and go, hey, this is the new value because the rents have went up, because we've raised rents here. How much are you going to give us? Here's where we need to be. That's one. We can refinance it. We can sell it. And I need to know who's going to be my buyer. It's not going to be a mom and pop. So everything we look at for Bell Capital, because I'm looking at exiting as a portfolio, right? For a Blackstone or a BlackRock or an EQR or a KKR or somebody big like that. It's not a mom and pop. I'm looking at who has more money than God, who's not going to run out of money, who can't buy a 400 unit deal. They have to buy 4,000 units or 40,000 units at a time. If you guys watch Blackstone, I think they just bought 20,000 units. Just like that. That's exciting, dude. That's where I want to be. At some point, I want either Bell Capital to exit like that with me and my partners and we really get rich. Boom. Just at one time. That's the game. Or we're in a position where we're like, look, you know what? We cannot buy onesie twosies, man. We got to look at a portfolio. That's my dream, man. I want to open the floodgates and make the way real estate investments are. Because right now it's only for wealthy people. It's only for really these people. Wealthy institutions, pension funds, private equity funds, endowment funds, sovereign funds. Like, that's who gets to play this game. That 400 unit deal is like, I'm sharing this with my network, but you're not going to get that call. No group is going to be like, hey, Joe Schmo or Jill Schmo, do you want to invest in this deal? That's not how these deals are done. These are for wealthy institutions, institutional investors invest money in these deals. They're not for the everyday, regular, hardworking entrepreneur, business owner like me and you. I want to change that. And when I do, I want to have a giant portfolio that Bell Capital, we control as investors, as partners. And we take that and we go feed Goldman. We go feed Blackstone. Like, that's the game here. That's one of the exits. And then, like I said, the other ones, we refinance, pull all our money out, and we keep these assets, and we sit, and we cash flow, and it becomes generational wealth to distribute cash flow to all of my partners, all you guys, forever and ever. And then when you die, it passes to your kids and your kids, because I'm building the infrastructure. Our organization is going to be there, right? You don't need to build your own finance department. That's what we have. That's what we're doing. So I hope this helps for today's training. Like, how do you make sense of investing in a deal? How do you make sense of the deal when you're going to invest money in it? It's got to make sense. It really does. Number one is it's got to cash flow. Number two, it cannot lose money. Number three, the possibility of future appreciation through job growth, increased rents coming around in the future. The location is sick. You're really buying the location, and if you control the best location in the best cities you can, and you invest with a bunch of other people, man, it's really... I'm not going to say it's impossible, but it's impossible for those type of deals, the assets we're looking at with that level of scale, institutional quality, to lose money. If you look at the last 4 decades, the assets that has not lost money has been institutional quality assets. It has not been those small deals, because those deals just continue to make money, right? So I love talking about this stuff, but this was a real estate training. Like, when you get your head wrapped around what you're looking at and go, dude, can I lose money in this deal? Will this deal cash flow when we buy it? Will it give me possible appreciation in the future? And you can check those boxes. That's how you make sense of whether you should put your money into those deals. All right. So I hope this helps you guys. Share this video, like this video, comment on this video. I'm growing my subscribers, man. I really appreciate all you guys for showing up. If you guys have questions, leave them in the comment section. We will make sure to answer those questions next week when we have our next show. And I'm looking forward to seeing you guys on that. So if there's any way I can help, move out of the way. Is that out of the way? It's out of the way. If there's any way we can help you guys, if you're interested in investing with us, or at least finding out how it is, or you have your own personal questions, go to bell-capital.com. That's bell-capital.com. And either hit get started and you can register. You got to be accredited. It's an accredited only investment opportunity right now, meaning you make $200,000 a year or you have $1 million of net worth. And let's talk. I'm here for you. We set this up towards you actually talk to a real person. I hate talking to freaking bots and being stuck on hold forever with people trying to get my question answered. It typically doesn't take long if you have someone who knows what they're doing. That's what we did. So use us. We're here for you. You're not going to invest 100,000, 200,000, 500,000, $1 million with anybody without actually talking to a human being, and that's what we want to do. We're here for you. So you can go there, register your account, you can see what's available, or you can get on the calendar and get started and schedule a call with one of us, and we will help you to at least get you straight and answer your questions. We want to talk. We really do. So if not, I'll see you on the next show. You guys have a great day today. We're here for you. Let's go.